Great. Live on YouTube. I'll quickly go live on LinkedIn. There we go, live on LinkedIn. 178. 178. One 78th episode of Thinker's Frequency. Live on LinkedIn as well. Now let me share this on WhatsApp. And then we will have the show that we deserve. The show that we deserve. The show that we deserve. 178th episode. Sorry for my throat, guys. I am recovering. Good. We're live on LinkedIn, live on YouTube. Everybody's been invited on WhatsApp. Now let's begin. Let me check myself on LinkedIn. I'm good on LinkedIn. Good morning. Get well soon. Thank you so much, Mr. Abhishek Sharma. Can you hear me? Now let's begin. Yeah, I am pretty good. Audible on YouTube. Thank you so much. Let's begin the show that we deserve, folks. Bum bum bum. Bum 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 bum. Good morning. Audible says Mr. Sumanth Kumar. Good morning, Mr. Kumar. Bum 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 bum. Bum 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 bum. Bum bum bum. Bum 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 bum. Good morning, everybody. Welcome to Thinker's Frequency. We're having such a good time. This is the peak of human civilization. We're working so hard, doing such good work for ourselves, our parents, our kids, our siblings, our husbands, our wives, our friends, everybody. Well, not other people's husbands and wives, I hope. And just when we thought things couldn't get any better, like they couldn't possibly get any better, well, they just did. Call it divine intervention, folks, but things just got a whole lot better. Now we have Thinker's Frequency, our daily mental workout, our daily dose of insights and analysis, which don't lead to paralysis right before we punch in. So let's continue with our journey of reading between the lines, things that are especially interesting and important in the world of business and finance. Let's go! But before we go, you gotta follow this tradition, right? You know the tradition? You know the sweet and sacred tradition of the simultaneous sip? We'll all sip something together and it'll bring us good luck, as it always does without fail every day. And all you need for the simultaneous sip is a cup or mug, a glass, a tank, a chalice, a stein, a canteen jug, a flask, or a vessel of any kind. Pour it with your favorite liquid. I like some hot water with black pepper in it. And here we go. Man, I needed it. Man, I needed it. It's so beautiful. Let's do it again. Great job on the synchronicity, guys. Beautiful sip. You did it well. You did well. I could feel the pleasure of that sip, right? You know what it says, right? It says that you're not alone. It says that we're in this together, which is such a beautiful thing to say. With that out of the way, let's begin. Mr. Ronak G3475 says, Jai Siya Ram, Sirji. Jai Shri Ram. Let's move forward, folks. So a lot of things are happening, of course, as always. But something very important has happened, folks. Starbucks India, Tata has asked Starbucks, essentially, they're meeting and deciding the way to go when it comes to uh, keeping the organization on, right? So Starbucks, of course, considers India very important. Whatever happened in China happened in China. The global Starbucks market is in trouble. Starbucks as a company has always been in trouble as soon as Mr. Howard Schultz got out of the way. Howard Schultz, the founder of Starbucks, extraordinary executive, great person, uh, great books. So he's written two books, Pour Your Heart Into It and Onwards. Both of them are great books. In fact, he's written four books, not two. One of them was written when he was trying to run for U.S. Presidential elections. So Howard Schultz is a great writer and a great executive. Definitely a legendary executive. He built Starbucks into what it became. Uh, and as soon as he went out of Starbucks uh, control, right? As soon as he's retired himself, Starbucks as a company has always faltered, unfortunately. So that's what Pour Your Heart Into It is about. It's about the first time when Starbucks essentially started falling, and he came back and he turned it around. So, great book, extremely nice book. Onwards is also a pretty good book. But India, Starbucks is struggling, of course, right? Revenues, losses are widening. It's not showing any signs of making any money. And the scale is huge. So they were thinking of expanding. They were thinking of going even more stores in the country. But now Tata is reevaluating the whole approach. It says it needs to alter its way of being in India. It says the high rentals, the 400 rupee cup, the equipment which is best suited for 700 cups a day, uh, you know, expensive establishment costs, all of those things will have to be rearranged a bit and changed a bit. So the next phase of growth could be achieved. So they are basically looking at smaller stores, maybe just, essentially making a standy kind of an operation. So very, very big shift when it comes to Starbucks strategy in India. Now, does it remind you of anything I told you? For all these days, for all these months, I've been talking a lot about the strategic problems when it comes to the coffee market in India. Do you remember? Do you remember, folks? Well, you do remember. We've talked about this. We've talked about this. What did I tell you about the Indian coffee market? Not the Indian coffee market as much as the Indian coffee retail market, the coffee shop market, the coffee cafe business, right? Did I tell you that all of these people are projecting uh, different markets' growth? Takeaway coffee could work, it reduces the rent burden, says Mr. Tushar Tiwari. Point well made, definitely, but it reduces the brand equity. Also, then the pricing of the product will have to go severely down because the product essentially becomes the commodity. So if you're talking about takeaway business, uh, it's you can't differentiate a Starbucks 300 rupee cup from a Nescafe 15 rupee cup, or something of that sort. So it becomes very different. So Starbucks, the philosophy of Starbucks has been the third place, home office Starbucks, right? They offer an experience. That's what Starbucks stands for, the third place, right? That has been their raison d'etre, if I'm pronouncing it right, reason of being in French. So uh, when that goes away, takeaway as a business essentially changes Starbucks. It makes Starbucks into something which it has not been. It has not been successful because of a take home business. Take home business is Nescafe. The problem I told you about the whole coffee cafe business was that people, when looking at the coffee cafe business, were always looking at projections of the West. So when Mr. Nikhil Kamath sits down with people who are running these coffee outlets and stuff like that, they always talk about India's per capita consumption of coffee is very low. China's is this much, US is this much, India's is one tenth, one fifth, one tenth of China and US respectively. So there's a lot of room to grow. And when it comes to coffee chains, the penetration of India is very, very low. So you need a certain sense of ubiquity for a concept to catch on. And I told you the problem with that, that thinking. That's basically pattern matching, right? It's not addressing the fundamental nature of the market, of the Indian market. Maybe Indian market is different. Maybe we are not a coffee drinking nation. Maybe we don't have that uh, per capita income to support that kind of a coffee expenditure. Maybe uh, India's coffee expenditure is basically all right, accounting for per capita income. Maybe we prefer alternate drinks. Maybe our culture it talks about less of coffee chains, less of third experience, but more of in-house, brewing experiences, right? So it is not the way to look at anything, right? This is what led to bad analysis, let's say, of Uber, right? These many cabs, India gets cabs, right? They didn't even think about retrofitting the model, taking into account the Indian per capita income or the affordability. Not many people can buy cabs, right? Not many people can afford cabs, and so on and so forth. So that is the kind of problem when it comes to uh, matching patterns and seeing, oh, this worked there, so it will work here, and so on and so forth. There is a fundamental problem in that way, and that is exactly the reality which is coming to bite every coffee chain in India. uh, Starbucks, all of the new people who've raised a lot of money to be the next Starbucks, their experiments will end in tears. That's almost certain. So let's see how that pans out. Uh, Mr. Amritraj says people want new stuff every 2 3 years? Question mark. No, no, no. Starbucks is in premium play, so I think it can still sustain in that segment. Luckin in China somehow cracked it. Now, China actually cracked. China is a different market that requires a very deeper analysis of what worked and what didn't work in the coffee business when it comes to, uh, China. Luckin, I have no clue about that company, so I'll not try to wing it, right? Uh, and regarding the premium play, so it can still sustain in that segment only if it can position itself. So there's this thing that people forget about premium, right? Premium and ubiquity don't cannot exist in the same sentence. Now it's very simple to think about. Premium and ubiquity cannot exist everywhere, right? So if you have something premium, uh, and you're opening 10 chains in a particular area, which is not that premium, that doesn't work out, right? The store expansion thing doesn't really work out when you're trying to position yourself as a premium play. So that particular aspect also gets missed a little. I don't think they are considering India as a whole as a target segment. They can definitely have a niche market that is premium, but their positioning hasn't been as such. So they're continuing to open stores, expanding stores. That, Mr. Sharma, you're 100% right. That would have been a great way to look at it, right? We're just going to stay limited in these many pockets, and we're not going to go beyond them. And these are the stores we optimize. It's going to remain a niche premium play, right? But that wasn't the strategy when it came to Starbucks, at least, from the older playbook. And even the playbook that they're changing now, it's not doing that. So this is once again a lesson, a teaching moment about how do you look at markets fundamentally, right? You do not try to do analogy thinking, pattern matching, because that pattern matching invariably leads to sustainability issues or scalability issues, right? Uh, that it's pretty awesome. Moving on, folks. Speaking of awesome, Safran is looking at transferring full tech for Indian fighter jet engines. So Safran is uh, a French company, right? French defense player. So they're looking at collaborating with India and doing a full tech transfer for the fighter jet play, the whole hot engine part, right? Likely a $7 billion project will include IPR for critical parts. So, aerospace firm, it is a complete transfer of technologies. We, along with DRDO, are basically going to develop a new engine together in India. This is unique because no one has made that offer. This is unique itself in a very, very big way. Of course, all the jet engines that currently get made, I mean, fighter jets that currently get their engines from GE and other companies, right? India doesn't get into that play, hasn't gotten into that play as yet. So this could be a way to change that, right? The fifth generation jet. You know what we believe as far as this whole fighter jet play is considered, right? All of the $1 billion that are going to go into fighter jets, they're going to just get washed away, and it's just going to be a wasteful expenditure. That's not going to lead to any practical, uh, you know, edge when it comes to national defense effort, because the era belongs to drones. Drones are the future. Drones are not the future. Drones are the present and the future. Fighter jets are basically just a means to kill people, right? You get a person in the jet, and all you're doing is endangering lives. Drones are the future. I don't know why Indian government is not warming up to the idea of essentially making more drones. Whatever billions of dollars we're talking about spending on fighter jets need to go into drones. And to any, because it's, as we've discussed so many times, drones are limiting nuclear power without limiting factor, right? So there is no ceiling to how great drones can be. When drones improve, counter drone intelligence improves. When counter drone intelligence improves, drones improve further. So it's an upward spiral which doesn't stop, and also which the cost keeps diminishing. So the tech keeps improving, the cost keeps diminishing with AI and everything, right? And all the money that we're going to spend on fighter jets, we're just going to regret it. Not in the next 10 years, it's just next 5 years. But somehow, uh, Indian strategy has not taken this into account yet, which is sad, which is sad. But, you know, that's that. So let's move forward. Reliance joint venture lines up $11 billion for 1 gigawatt Vizag data hub. So, Connexion, a joint venture set up by Reliance and Brookfield and Digital Realty, they are basically looking at an $11 billion data center, Vishakhapatnam. This is huge, right? If you look at the state's data center operations, it's amazing, right? Google had a $15 billion investment, 1 gigawatt. Then SIFI had a 500 million megawatt plan. Then Tillman came out with 300 megawatts. And then Reliance is looking at 1 gigawatt yet again, 400 acres project. Andhra Pradesh is just killing it. It's just killing it, right? Mr. Chandrababa Naidu, he's doing an amazing job. It's just extraordinary whatever he's been trying to pull as far as the investments are considered. It's awesome. It's awesome. Move forward, folks. uh, uh, you know, when it comes to uh, India and states and the kind of investments and the kind of uh, new frontiers that they're looking at, Cabinet has okayed the 7.3 crore, 7.3 thousand crore rare earth scheme. So this was on COTS. This is an ongoing story. Viewers of Thinkers Frequency would remember. The rare earth magnet situation led India to move forward towards making their own rare earth magnets, right? The center came up with a scheme to incentivize development of these rare earth mines, right? Mining operations. 7,280 crores, 7.3 thousand crores of the scheme was proposed, and then that scheme has been, approved by the cabinet. So green signal to the to multi-tracking projects, Pune metro expansion as well. So there are other expansion projects. Pune metro line is also getting So this rare earth magnet play talks about Mr. Ashwini Vaishnav is talking about how it's going to provide India the sovereignty when it comes to rare earth minerals. He says India has one of the greatest reserves of rare earths, right? And this is going to be a beginning of harvesting of them. So this is obviously a good news for the country. India has, as discussed last in the last episode, India has a window of about 3 to 4 years, or maybe 5 years at max, before Chinese hegemon takes over the world. Right? U.S. sooner or later is will have to uh, give way to China. China is already the world's largest economy in terms of PPP, right? It's soon going to be the world's largest economy, growing at 5%, currently at 17 trillion, basically adding what? About $1 trillion, about $1 trillion, right? Every year. So it's going to be 20 trillion in the next 2 years. Yeah, so in very soon it's gonna eclipse US, and when that happens, India will have no shot at countering China whatsoever, because India, China is an adversarial neighbor. It is an expansionist country. So India will be in a big trouble when Chinese hegemon effectively takes control of the world, and that has some time, right, till that happens. And in that period, India has to uh, essentially make uh, if get independence, or claim independence in electronics, in pharma, and in rare earths, basically core components, right? I'll say it again: electronics, pharma, and the core components, the minerals, and so on and so forth. It's a very short window, and India will have to find a way. Mr. Abhishek Sharma says, prediction time. Which listed company could benefit from the rare earth scheme? Well, well, well. Rare earth scheme. Which listed company should benefit? There's, of course, Vedanta. Vedanta will benefit, right? It's the de facto proxy of Indian mining play. Which else? Mining stocks are running up already, says Mr. Tushar Tiwari. Is it? I didn't know. I didn't check. But which other stock do you think will benefit? Or because this is gonna be like a 5 year play, right? You put the money and forget for 5 years, and that's where you will see a lot of growth happening, because this is a green frontier. Uh, I don't know. I mean, in today's day and age, I think Jindals, could also venture into this, because they are so in such a mood to expand in different areas, right? And this basically will give them a good foot in the door when it comes to EVs and so on and so forth, right? The automotive sector, they are already bullish on it. They are trying to create their own car company. So it's possible, but Vedanta seems like an obvious bet. However, I'll be very happy to hear what other people want to say about that. It's gonna be it's an interesting question. Prediction time. Prediction time. GMDC, says Mr. Tushar Tiwari. GMDC. GMDC. Gujarat Mineral Development Corporation, mining company. Share price up 10% already, just the last day. In 5 days, uh, okay, 1 month it's low, 6 months 50%, 1 year 50%, 5 years 1000%. This company is already doing pretty well, right? State owned minerals and lignite mining company based in Ahmedabad. Maybe, maybe, maybe. So, very interesting. This is great. Speaking of, by the way, rare earths and so on and so forth, Tata is looking at creating a manufacturing facility to make ingots and wafers. Now, this is for people who don't know. This is essentially the solar core equipment. The solar core equipment is very important for the country because even though we make a lot of solar, we have a lot of solar manufacturing companies, those companies don't really manufacture anything because 88%, basically all of the core component when it comes to solar manufacturing, those are basically the wafers, the ingots, and so on and so forth. They are made in China. So that has come down from 88% of imports, it's come down to some 66%. But that's also an accounting play. So you get a part, get it completely knocked down, bring it in India, and then put it together. And then you put the greater part together. So it's not really making the part. But Tata Power is looking at Odisha to set up its 10 gigawatt ingots and wafers plant. This is huge. This is basically backward integration happening, right? This is very necessary because no matter who wins or who is implementing solar well, let's say even if India is doing a very good job when it comes to solar energy implementation, who wins? You know who wins? The answer is in one word, folks. Who wins? Come on, come on. It's a part of the mental workout. Nobody? Customers? Mr. Sumanth Kumar, no. China. China wins. No matter who is implementing solar, no matter how much of solar implementation is happening, sure, customers win, but actually China wins, right? Uh, and that is very sad. That is very sad. So the entire solar power revolution, uh, Mr. Abhishek Sharma says China, raw material. Correct. That is the right answer. So if you look at India has done remarkably well when it comes to solar energy implementation, right? Remarkably well. We had like a 50% target of 2030 when it comes to renewable energy. We achieved that 5 years early. So we've done very well. However, whatever we've done in the solar play, it's basically advantage China, right? And this particular investment, this 10,000 crore investment by Tata, could be a step in the direction of Atmanirbharta, so to speak. Has the cost of power come down because of solar in China? Oh yeah, China is having deflationary impact on energy, Mr. Tushar Tiwari. It is, it is, it is. China is having a real deflate. I told you about it. I guess we talked about it, right? So I had made this prediction about 170 days ago. In one of the first few episodes, I talked about how energy rise is going to happen and energy consumption is going to rise. And sooner the energy consumption is going to come down because AI is going to get more efficient. And when that happens, the deflationary impact will start hitting the Indian play. I'm sorry, the energy prices, and that's exactly what happened in China in some form a few days ago. Have you read Breakneck by uh, Dan Wang on China? No, I haven't. Asks Mr. William Davis. I haven't. I haven't. Is it a good book? Is it a great book? Should I read it? I've always been wary about books written from Chinese, on China by Chinese people. So I consciously avoided Jack Ma's autobiography, right? When it came out, everybody was picking it up and so on and so forth. And I was like, right? And soon after, soon after that book came out, that guy got jailed, man. And he disappeared from public life. So essentially, I was right, right? Whatever China publishes, it's propaganda, but it's not subtle. It's not subtle. And that's a problem. I like subtlety. Right. Moving on, folks. Let's move on from China. Mexico is looking at a tariff situation for autos and pharma. So Mexico is basically a very important play because a lot of Indian automotive component goes to Mexico. Mexico is a good market for India, has been, right? For two-wheelers, for four-wheelers, even for three-wheelers. And it's also a component market for India. So India sends a lot of components, auto components. Those components are then sent to US. So it's also sort of a, you know, a bridge for India. So that they are looking at a tariff kind of a situation. If they look at, so they're saying that they, whichever country hasn't signed an FTA or kind of a thing, they'll lead a tariff. If that tariff happens, it's gonna be a double whammy for Indian auto. And pharma companies are also worried, even though no pharma tariffs have been announced by Mexico, because if they place a tariff on pharma, it's just gonna be a self-inflicted wound, right? But auto companies, that they can manage. So they have an auto manufacturing play, and 60% of their demand is met with domestic manufacturing. However, a lot is imported, and then so that's what's happening. Mexico is a very big market with exports of $887 million. That's almost 8,000 crores. Mexico is third largest destination for car exports from India after South Africa and Saudi Arabia. So Indian car exports, South Africa number one, Saudi Arabia, and then Mexico, right? Uh, Companies such as Maruti, Skoda, India ship out nearly 1 lakh vehicles, or about 12% of Indians' total car exports to Mexico every year. And that's also a growing market. And it's not just these four wheelers, let me tell you the numbers around the two wheeler operations, right? In Mexico, it's also the largest market for India's two wheelers, $390 million. $390 million, and second largest for 3 million three wheelers, $51 million. So 880 million, 390 million, and 50 million. So that's basically Mexico is essentially about a billion and a half kind of a market for India. If that happens, it's going to be bad news. But let's see how India navigates this situation. I think India will do a very good job as it deals with Mexico, right? Let's move on, folks. I hope you're having fun. I've realized something. It's actually an input from a viewer of Thinkers Frequency. He said, Nishant, so when you have quick monologues, and when those monologues are, even though they are well structured and you're talking about whatever you're talking about, and in a flow, it's great. But it's always better when you ask questions and people have an opportunity to respond. That's beautiful. And I'm like, sure, sure, we could do that. We could do that. Moving on, folks. Eternal has injected 600 crores in Blinkit. This year, Eternal, that's Zomato parent company, they have essentially invested about 2,600 crores in Blinkit. Profitability is obviously a concern. Everything is a bit of an issue when it comes to quick commerce, right? And profitability, those two things don't really go along. But Blinkit isn't stopping, and it doesn't have to, because no matter what happens to the whole industry, if there is somebody who can survive, it's going to be the top dog, right? And right now, the top dog in the Indian quick commerce play is Blinkit. And the way Blinkit is moving, and what and while Blinkit is moving, whatever is happening to Swiggy and Zepto, and of course Big Basket, right? These three players, it's all advantage Blinkit. And as that advantage compounds on Blinkit, it's gonna be tougher and tougher for even Amazon and Flipkart, the people which have most to lose, right? If quick commerce takes over their business, it'll be a big problem for them to catch up to Blinkit. So even if, right, these people step up all their games, Blinkit might just be the only party which survives, and that's going to be very interesting. So there will have to be some consolidation when it comes to quick commerce, but Blinkit might be the party which benefits from it. That is a prediction. So let's move forward. Speaking of quick commerce, folks, aggregators, they've gotten a recent memo from the government on this labor code thing. So with this labor code, there is more structures, more structure, more compliance for gig workers, right? Social security, they come under the ambit of social security, which is very, very necessary. Companies are responding, saying that this is not going to have a material impact, even though compliances and regulatory ambits and regulatory umbrellas lead to more costs, they say it's not going to worry. Of course, they'll say that. Who will say that? Yeah, it is a big worry. Nobody, right? Uh, that is what's happening with Blinkit. Moving on, folks. I just finished my sips. I need more of sips, man. Anyway, so ED has arrested the founder of Windsor Games, right? Gamescraft. In a related story, real money uh, gaming, the court case is on, and the government has said that people used to lose, Indians used to lose about 20,000 crores every year to real money gaming apps. And it's good that we've done a blanket ban. So this is a court case now. Some of the people have litigated. They've they're coming up with their own versions of constitutional sanctity when it comes to right to work, right? So it's probably a case of right to work, that you cannot take away somebody's right to work and so on and so forth. You can only regulate it, and the way they've, so it's also a procedural debate. This legal uh, chapter is on between the government and litigators on behalf of the companies that have been banned, right? And this case is on. It's very interesting. Uh, it's a good legal case study on how these companies will argue against the government, right? Prima facie, you don't have a case, right? It's the government makes laws, comes out with a regulation, it says blanket ban, and that's it, right? What can you do about it? Constitutional powers rest with them, and so on and so forth. However, there are a few places and there are a few ways in which they can argue, and it's not always fundamental argument. It's also a procedural argument that okay, you did that, but the procedure was wrong, and since the procedure was wrong, you're wrong to do this, right? So this has to be taken away, right? So that becomes an interesting case. No matter what happens, you know what will happen in this case, right? While this case goes on, no matter what happens to real money gaming, for all practical purposes, it's dead, right? But you know what will happen as this case moves forward, right? You know it. Come on, come on. This is an insider joke that viewers of Thinkers Frequency know so well. There is a comment on LinkedIn. I really appreciate your dedication. Okay, well, thank you. Whenever, I'll come to that. But anybody, what will happen while this case is going on, folks? Come on, we know about this. This is a very interesting play, folks. No matter what happens to real money gaming, what will happen as the case goes on? Nobody? Lawyers make money. Says Mr. Sumanth Kumar. Correct. Lawyers will make money. Speaking of lawyers making money, folks, there's a lot of consolidation happening with lawyers. I mean, companies are merging, legal companies are merging with CACS practices. Why do you think that is happening? That is also a developing story. They're happening so that India can have its own big four when it comes to this whole consulting business, right? This is very important. This was the segue I wanted to create between these stories. Lawyers make money to lawyers leading up to consolidation, so that we can have our own big four when it comes to consulting services, the MBB play, right? And by the way, I just lost my train of thought because of a comment, but what was that? Yeah, speaking of MBB, folks, McKinsey is looking at firing people. So McKinsey is firing people, and it says that it's using AI, so it's going to transition to AI. The Free Press recently wrote a very deep dive saying that the era of consulting companies is done, and they are going to lose a lot of ground to AI, and now it's coming out that McKinsey is actually having to fire people because of AI. Mr. William Davis wrote a comment and then deleted, but I read it. So he says that Breakneck is the book written by China, by Mr. Wang Dong, and it's about how US is run by lawyers and how China is run by engineers. I get it. I get it. So this is the book which essentially was quoted by Mr. Elon Musk recently, right? When he said that US needs to be run by uh, engineers instead of lawyers because there's a lot of litigation that keeps happening in US. So China, on the other hand, is run by engineers totally because they are just focusing on building things and not litigating, and so on and so forth. This is the book which essentially was the parent of that quote. That is interesting because that quote is how I came to the lawyers make money bit, right? Uh, viewers of Thinkers Frequency know how we came around, how we explained that whole litigation experience. So when we talk about lawyers making money, it's not that we're praising the legal profession. Of course, I come from a family with 4 generations in law, so that's cool. Lawyers should make money, but lawyers making money tells you something about the society and the government and the country, right? If there's so much of money in litigation, if there are so many problems in the country, right? This needs to be figured out, that because litigation is just lost money. It's people screwing each other or suing each other, right? Pun intended. So that is something to look at. Was off topic, so deleted. No problem. No problem, Mr. William Davis. Although I don't think you're Mr. William Davis, right? What is your name? Moving on, folks. Yeah, so I was saying, whenever somebody says that I really admire your dedication, it is a compliment. Of course, it is a compliment, but it seems like a consolation prize, right? Because dedication is not something to admire, right? Dedication is good, but ideally, the fruits of that dedication should be so overwhelming that nobody needs to praise that dedication. People have to praise that dedication when you know the exercise seems to be a bit futile, right? That's when somebody says, I really like your dedication. Nobody watches the shit that you do, but still you do it every day, right? I really admire your dedication. That's sort of anyway. Moving on, folks. India and Indonesia talking about BrahMos, right? Cruise mode. Minister visits the second-hand man when it comes to Indonesian power circuit. He is talking about BrahMos. Of course, why? Because everybody has to counter China. It's very interesting. Russia extends green signal for the deal. BrahMos is, of course, a missile, a project that has been created in collaboration with Russia. BrahMos, it's probably, a wordplay. I forget where the whole, what is it called? Hindi. In Hindi, it's called Sandhi Vichhed, right? So I don't know the Sandhi Vichhed of BrahMos missile full name. Brahmaputra and Moskva. Yeah. Moskva is the river in Russia. Brahmaputra is, of course, this in Indian River. So 2 rivers, BrahMos. So Russia has given a go-ahead for the deal. We love to watch the shit that you do, so. Thank you so much, Mr. Peeyush Sethi. But you got to appreciate how we've been doing this so regularly and how it has helped us. It's literally doubled our money in many cases. Certainly true for me. And but it has not yielded any social media currency. So if I shut down Thinkers Frequency today, right, and I just wake up every day, because now my routine is set, right? Even if I'm unwell, I just wake up at this particular time and I'm up and I read and so on and so forth. So if I just shut down Thinkers Frequency and I just choose to write an article every day instead of doing Thinkers Frequency, my popularity on social networks, which it'll go, like, it'll just basically go through the roof, right? Because what in my case, my writings they reach like 1 lakh people, and Thinkers Frequency reaches less than 1,000 people, right? In totality on LinkedIn and on YouTube. But the beauty is that the output that Thinker's Frequency has given me when it comes to discussing these things, when it comes to talking about them, and when it comes to refining my train of thought and the way I speak, that is more important, because I'm not a content creator, so I don't need to have that kind of following, right? That's not what I'm trying to optimize. This has been a great exercise that way. However, from a popularity perspective, or from a social media following perspective, or social media metric perspective, it's been an absolute, uh, you know, self-inflicted wound, because it doesn't reach so many people and brings your popularity down. In fact, whenever I message any this group about Thinkers Frequency, right, every day some people have to leave because they can't follow the routine daily, and when they read about this every day on the WhatsApp thing, they exit the group, which sort of hurts my reach on LinkedIn as well, because that's what I do, right? I share my articles on WhatsApp. Also, people who've been a part of this WhatsApp thing, they've s- I presume that they've muted the community now, because every day they get this thing about Thinkers Frequency, which they cannot join because of whatever their constraints are. So that essentially also hurts that particular play, right? So, and why do they not care about Thinkers Frequency? I understand, because articles take 2 minutes to read, right? While Thinkers Frequency takes an hour to watch. But what we've been focusing on, and hopefully what we've been delivering, is that hour turns out to be worth it, right? And that's what's been happening for 178 days now. So this is an interesting case study. Am I making a mistake? Am I making a mistake? Am I hurting myself by doing Thinkers Frequency? Or am I not? So, when it comes to metrics, I definitely am. But when it comes to intangibles, the whole aspect of talking to people live, right? Doing this performance of 1 hour in the morning as a routine, I'm pretty much gaining. So it's a very difficult thing, right? Very complicated play. Moving on, folks. Generic drug companies rework pricing to gain weight. So, of course, patents gonna expire somehow, right? So Novo Nordisk has decided to cut Wegovy's price by nearly 40%. So from 7-8 thousand per drug, per, you know what do you call it, serving, per dose serving. So for 7 to 8 thousand, it's come down to 3-4 thousand, because 2026 March April is when the patent expires. As the patent expires, the generic plays are gonna be in the market, right? Indian players may launch semaglutide at 3 to 5 thousand for a month dose in the first wave. So that's what's happening with this particular play. 3 to 5 against 7 to 8 thousand a month. Pressure will intensify next month, with Novo expected to launch Ozempic in India at a similar or slightly lower price band. Now it's going to be a commodity. As the patent expires, becomes a generic play, right? That's when it's going to go mainstream. Right now, about 1 lakh people take it, right? Then 10 lakh people are going to take it, and maybe more. So earlier estimates were 10 lakh people next year. Now they've revised that estimates to 12 lakh people. India has about 24 crore people suffering from obesity, directly or indirectly, right? And they say that this market is going to target that. So let's see what happens in that direction. I'm sorry. Moving on, folks. Telcos could be ringing in 35 billion rupees in revenues this fiscal. 35 billion rupees. Telcos going to make a lot of money. Uh, However, I don't understand the concept of billion rupees. Why would you do that, man? Come on, man. 35 billion rupees. I can understand $1 billion, right? But this billion rupees just confuses me. Although I just have to divide it by 80, right? But when it comes to $1 billion, yeah. So I have to divide it by 80. So if I have to divide it by 80, if I have 40 billion rupees will be 80 billion rupees will be $1 billion, right? 35 billion rupees will be $500 million. Is that true? I am sure I'm making a mistake. Somebody please correct me. But the ARPU is crossing 200, 215 this fiscal, 216 by FY28. The ARPU, average revenue per customer, per user, is going up. Uh, uh, Airtel and Jio are gaining customers. Vodafone is still losing customers. So Vodafone is still the dumpster fire truck on steroids, right? It's not gaining any ground. Whatever ARPU growth it can get can be fetched on the back of these two front runners, Airtel and Jio. It is still losing ground, right? And that is what's happening when it comes to the telco play. Now, uh, why is that happening? What do you think is the reason for Vodafone's demise? Why is Vodafone still losing customers? Right? That is a very important question. Can anybody answer? Till then, I'll just try to figure out this billion rupee thing for once. Oh, it's a typo, folks. They meant $1 billion. $35 billion. They meant $35 billion. Anyway, did you get the answer? Why is Vodafone declining still? Right? It is a very important question. And you must know, viewers of Thinkers Frequency, of course, not able to compete with Jio and Airtel, says Mr. Abhishek Sharma. The real reason is Abhishek Bachchan. Of course, the actual reasons are very complicated, right? Because there's network effect. They're losing the telco play. Their services are lagging because of the lack of capex. Their technology stack is old. So they've not been able to make investments neither in technology, neither in marketing, and so on and so forth. That's a serious answer to that question. The real answer is Abhishek Bachchan. They got Abhishek Bachchan, man. That's when I knew that I had to short this company. Anyway, a promoter entity of Mr. Bharti Mittal, no relation to me, has sold 7,200 crore stake, 0.56%. This company is ICIL. This particular play, they have about 1.48% stake. Now it's going to come down to 1%. It's a standard thing that they keep doing. Maybe they are looking at this particular price point as a good way to sort of, but they keep buying back again and so on and so forth. So it's a routine thing for these people. Many time group holdings get exchanged. So Bharti Group has also been doing one group selling and the other group buying and so on and so forth. So that's just what's happening. When it comes to telco folks, there's also the fight between Tejas and Airtel. So Airtel had told Tejas that their equipment is substandard. Tejas has responded that it is not substandard, it's actually good. It's about the interference which is happening because of the antennas, the difference between, the distance between the two antennas of BSNL and Airtel. And because they've not been well settled or well designed, this interference is leading to these problems. It's not their equipment which is at fault, right? So Tejas Networks has said its telecom equipment meets the industry's desired quality standards. Since our equipment is coexisting with other operators' equipment in all states across 1 lakh sites without any interference issues, it can obviously not be substandard, right? The local gear maker, however, said if the antenna of two telcos face each other at a relative proximity, additional filters need to be put up, and BSNL has already put that in some places. So it says that if the antennas face each other at some proximity, some filters need to be put up, and they're not existing. That's why this is happening. And Airtel's defense is that we were always there, right? So it's not Airtel's fault as well. It's not Tejas' fault as well. It's just complicated, right? It's just complicated, as most things in life. Uh, RBI takes practical stance on family trusts and investment companies. Central banks permits a case-by-case ownership transfer of finance and holding companies to private trusts, but wants trustees to be family members. So this is an ongoing story, folks. We've discussed this. This is slightly hard to understand. But earlier the contention was that if there is, right, how do I put it? Uh, if family trusts are investment companies and they're also investing in markets outside, so they didn't want family offices to also be sort of punters of some kind, right? So that, no, I'm not being able to explain. So, okay, so what they're talking about is that they're permitting a case by case ownership transfer of the finance and holding companies to private trusts. So, let's say if a family office has a particular holding company, a finance and holding company, and wants to transfer it to the trust because of, tax and future tax and so on and so liability, the trustees have to be family member for continuity purposes. That's what RBI is stating. So it's a long drawn story about how money needs to be parked or how money needs to be managed when it comes to these trusts and their ability to make investments, right, in markets inside and outside the country. This is particularly what they're trying to do. And for now, they're saying the practical stance is essentially enabling them to evaluate, enabling RBI to evaluate in a case to case basis, stating clearly that the trust needs to have family members on it as trustees. So directly and indirectly. So families typically hold investments through NBFCs. Many want the transfer of holdings to private trusts. Such shifts need RBI clearance as it marks hang of control, right? Because an NBFC is a regulated entity. It is a deeply regulated entity, and if it goes into a trust play, that trust cannot be as regulated as the NBFC, right? So this particular play is getting a renewed focus. These things, why are they so important? Because they decide the direction of the big money, right? They decide the direction of the big money. If this wasn't allowed, family offices wouldn't be incentivized to set up NBFCs in the first place because they know that they won't be able to take it back if that is possible, right? So it is a slightly issue. The central bank is also reviewing requests for overseas investments provided they meet the prescribed guidelines. Right? So case to case basis for now. Let's move on, folks. IMS is pushing for more reforms as India's growth stays strong. Speaking of India's growth, Fitch has upgraded India's fiscal target to 6.5% growth. 6.5%. Uh, 6.5%. And IMF is talking about close monitoring of impact of GST, IT cuts, improvement in data quality, room for monetary easing if inflation remains low. So all eyes are on the rate cut. Rate cuts are very, very important, right? If inflation stays low at 2.6%, current legal limit is 4% plus minus 2, right? So if it stays at 2%, now inflation, of course, people will say that inflation, and that's a pretty idiotic thing, right? Inflation is not 2.6%, right? महंगाई बहुत है शहरों में, and so this is bullshit. There is a CPI, there is a basket, right? Just because you are feeling महंगाई because you have a lot of expensive education in your play and you have cars and you have houses and you have home loans and so on and so forth, just because you have that doesn't mean that the consumer basket is representative of that, right? So the consumer basket is representative. Food has a very, very big role to play in the consumer basket. The CPI has some dependency on food, over dependency on food, and that is also very tough to, it's very volatile, right? The food prices and so on and so forth. So that particular, so inflation, if it's low, if it stays low, and we get a good deal from US, there'll be a room for a rate cut, right? Which is exactly what we are trying to do. So let's see, right? Moving on. US data makes rate cut likely. Indian markets up. Indian markets are up. And Indian markets are looking at crossing all highs because I told you the good segments, the miners, the metals, all these people, who are modestly priced. Their earnings have flipped. Their earnings have grown. As their earnings grown, their price to earnings have come down, which has made Indian market relatively less expensive than before. If it gets less expensive, then because it becomes more and more lucrative for foreign investors as well. So that's going to attract some money. Let's see what happens in that area, right? For now, US data cut is looking at affecting the Indian markets very positively. Moving on, folks. Long-term outcomes of popular IPO themes could disappoint, says Mr. Prashant Jain. He's the co-founder and chief investment officer of JP Investment. Well, thank you, sir. We know it. We know it. Yeah. Mr. William Davis, all of these are crypto bots. This is why I am bearish on crypto, right? If people have to promote crypto with this, just tells you there must be fundamentally something wrong about crypto. If it's such a Ponzi scheme that they literally have to do this, so it's just pathetic. Anyway, folks, moving on. Long-term outcomes of popular IPOs could disappoint. We know that. ICICI and Canada likely to raise 7,500. More banks head to the bond markets. Well, of course. By the way, speaking of bond markets, the municipal corporations, muni bonds are they called, municipal corporation bonds, they are also fetching record money, right? Nashik's bond sale takes municipal mobilization past 1,000 crores this fiscal. SEBI efforts also prompt more tier 1 and tier 2 bodies to take this route. If municipal corporations could raise their own money in the form of bonds, it could be very, very good news. Very good news, right? For not just the finance mobilization play, but also for people. That's the beauty of it. Moving on, folks. British economy is in toilet, right? Taxing times ahead as Reeves pushes up the burden button. The debt to tax ratio is up. Britain's tax to GDP ratio, 38.3% of economic output, a fresh post-war high. Very, very bad. Speaking of economies, Japanese economy is issuing $73 billion new fund, right? Again, a problem. Bond prices up. We've talked about the carry trade. It's going to be a bit of an issue, man. And with that, we come to the end of the 178th episode of Thinker's Frequency. Our daily mental workout, our daily dose of insights and analysis, which don't lead to paralysis right before we punch in, right? It's 9:17. We're going to punch in anytime soon. I wish you a beautiful day personally and professionally. And I'll see you tomorrow, same place, same time, hopefully, right? I hope you had fun. I hope this added a lot of value to you. It was definitely a lot of fun. It was a good value add for me as well. Let me just thank Mr. Abhishek Sharma, Mr. Sumanth Kumar, Mr. Ronak, Mr. Tushar Tiwari, Mr. Amrit Raj, Mr. William Davis, Mr. Peeyush Sethi, and everybody else who joined, right? Please take care. I'll see you tomorrow. Hopefully same place, same time. Bye-bye. Thanks for your time. Have a great day. Bye-bye, folks.